Hello, Uncle Fu. Good afternoon.
Hey, Uncle Fu, Josephine, always our
Hello, Josephine.
supporters.
Yes, our
All
loyal
right.
supporter here.
Yeah, great to have both of you.
Hmm. Terence, how was
Okay,
your
people.
weekend here?
Not too bad. I had a new mentorship over on Saturday, so today it's supposed to be a rest day, but we're gonna pick up the pace with Fastly, right?
I see, yes. Yeah,
Oh
we
my
can do
goodness.
that.
I'm actually not at home, but oh well, let's get the session done.
Yeah,
we
sure,
have we
sure.
yeah we have dedicated the session to people we have promised people, so we'll get it done no matter where I
Hmm.
am, no matter where I
All
am.
right. Let's see.
Okay, yep, we'll just give them another 1-2 minutes to stream in, and then we'll get going from there.
Yeah, sure.
All right, Uncle Fu, I hope your weekend is great. Josephine as well. Okay, I hope everything
Right.
is going fine.
If it's the first time here or if you're our repeat viewers, yeah, just say hi here so we know you're here and we can just drop you a hi as well. Yep.
Yeah. Oh, but
Right.
I do have a pretty crazy and interesting thing to share.
Oh,
Uh, we had what the was it? Oh, it was Genting. I think it was Genting, right? That released that they're gonna do a cruise to nowhere.
uh-huh.
Yeah. And I had this basically I basically heard a conversation where it went like the day it was announced. All right, we had this family that was so eager that they immediately called to make sure that they find out all the plans that are available, all the offers that are available, and they had to book it on the spot. And they were wasting no time. Yeah, right, they were
Mm.
wasting no time to make sure that they get themselves on board.
Ah, that's amazing.
Yeah, I mean, oh my goodness. I mean, it's like, oh, people need to travel, man. Singaporeans really need to travel. That's how,
Yes. I
uh,
agree. Right.
and then,
Uh,
yeah.
right. Let's see. We do have a Facebook user here. So just as a reminder here, if let's say for example, if this is your first time here and you have not selected or rather provided enable your details, your Facebook profile to be viewed by StreamYard, you will show up as this in our comments. So you will actually need to do that so that we can identify you. And if let's say you raise a questions or a comment, we will be able to address to you personally. All right. Same time here, saying hello to Jason, Tony, Christine, as well as Big Jim. Hi everybody. All right.
Right.
So we have let me see whether we want to wait some more. Eh,
I think we can get this session started. I think we have not too much difficulty.
all right then. So Terence is going to take a backseat today. I'm actually leading the session today. All right, let's get started here. All right, welcome to the stock knitting sessions. Terence is already waving. All right, so welcome to the stock
Hey.
knittings. Yeah, welcome to the stock knitting session for today, 18th of October, the week of my birthday. So I'm fully recharged now. This is my first session after my vacation here, so you see me all ramp up. All right, so let's see. Right, we're going to look at Fastly, but before that, just is a disclaimer here. All of the sharings and any companies that we mentioned today is purely our opinion here. It's probably for education purpose. If let's say, for example, you like to take out any trades of your own, or if you like to consider any trades that we discuss, please make sure that you do your own due diligence or seek out financial advice if you need to. All right, so let's go straight into Fastly here. Now, Fastly this is a 1 year to 1 day chart of Fastly, and you'll notice that the sync is sounding off, all right, on the last two trading days that we see. So actually what happened on the birthday, on my birthday itself, on 15th October, there was an immense gap down for Fastly, FSLY, and it actually came off from the $100 region, moving into the 80s and the 90s region here. So what actually happened to that was actually because of a downgrade in their quarter three revenue outlook from the last earnings that they have announced, last earnings announcement that they have done. And a few different agencies actually downgraded them. We see BAT downgrading them from outperform to neutral, and their target price is actually lowered from $105 to actually $85. And we also see the step out of lowering them to hold from buy. So the target is actually lowered to $77 from the original of 98. Now, in the pre-market trading for the day itself, right, the stock was actually down by close to 30%, actually 29%, to $87.50. Now, this, to me, actually, this is something that will set sharks in the water for a lot of our viewers here, because we do see a landslide victory in terms of the poll we did when we are looking out for the dedication for this weekend's today's sharing here. Fastly actually did kind of like more than half in terms of the interest that is generated among our viewers here. All right, so let's look at it here. Now, Fastly as a company profile here, what it does is, in a nutshell, if you are going to use one word, cloud. And that's it, cloud. Basically, it's just cloud businesses. All right, so what it does is it actually operates cloud edge platforms, programs, and software developments to support their clients. And they also help to support clients which actually do publishing, media, and entertainment. And they generally derive their revenue from their customers' usage of their platform. So think of it as like they are renting their services to the customers themselves. Now, under the company's profile, right, this is actually kind of like a speculative growth company. This is a very young company here. In fact, we don't even have like 3 years data for the company itself. So you must understand that when we're looking at fundamentals data, right, we try and look at, in fact, this is, I'm not wrong, this is the 15th. This is the 15th episode of the stock Nit-Picking session with IMP. So for the past 14, I think we only did about 1 or 2, which is like growth stock, and the rest of it were mostly like established, mature blue chip companies, or established mature companies which have actually went into kind of like a temporary issues, and they are actually recovering from their bad patch here. Now, Fastly is a totally different type of companies that from types of companies we've been looking at. This is a growth company here, so the approach will be slightly different here. Okay, this is a speculative growth company. Now, before we go straight into the company here, I look at the poll result. I think there was something that really raises an alarm to me, because I would like to be more concerned in terms of why. Why are our viewers actually having so much attention to that? So before I go into that, can I have a viewers for those of you who actually did the poll, just by commenting on the chat here, let me know if you have voted for Fastly just by commenting on I voted FSLY. Can we do that, please?
Actually, I think we can add on to it. Maybe we can also add in the part where, if you're actually invested, that means you have a vested interest in the research that Jeremy did, or what I'm going to add on later on. Just put it, type in vested interest, vested.
Yeah, so if you have voted, you can just type I voted. If you have vested, you can type vested. If you have done both, you can also type I voted and vested. All right, so let us have your participation here, because I want to know the feel of the participation here, so to see where are we going into that, because today's sharing is not that I want to oversell it, but today's sharing is something that actually hit me as I was still snuggling in my hotel room bed earlier this morning. I look at it and I think that, okay, this is a company that I can share a very important concept to our viewers as I'm going to do the sharing today. That is why I asked Terence to be able to take the lead today. All right, so with that, I actually need your participation here so they can actually feel and you can actually engage yourself to get the full effect of this sharing that we have about. All right. All right, so we're just going to give a few more moments for our viewers to actually comment and let us know whether they have any interest in that, whether they have voted or whether they have vested here. All right. Okay, now let's move along. And I need to ask you this question for those of you who have commented, or even for those who are not participating yet. Now, you see, we are in the stock market, in particular the US stock market in this case. We definitely need to look at stocks, right? And in that, we will have options that we use. We will have other derivatives, futures, things like that. But can I ask you the question, very simple question. Aside from the stock, okay, no trick question here. What is more important than a stock in your journey in the stock market? If any of our viewers have any opinion about this, maybe you can just shout our answer out in the comments here. Maybe Uncle Fu, maybe Josephine. Let's see.
Right. Yeah, I think in the meantime, I think Jason, you're in the room right now. Jason, if you can click on the streamyard.com link, then it really help us. Otherwise, you're just gonna appear as Facebook user on our back end. Right. So if you're joining us for the first time, remember do click on the Facebook streamyard.com/Facebook link to approve them, so we can actually see that you're leaving comments during our live sessions. Yeah.
Yes, today's
Okay.
session is pretty interactive here. So we do have Tony actually saying that it's actually the business. I do believe you're looking at the business model, the business operation here. Tony, yes, that's a good try here. More important than the stock is actually the business behind the stock. This, you're right here. But this is not the most important thing here. Okay, if I can give you a hint, it is the only single consistent factor in your entire journey when it comes to your be it investing or trading journey. All right. Do we have any other takers to try that? All right. Okay, we do have Enrique. We're saying the actual businesses they are involved in. So similar to that, maybe the industry, the business model, the operations, maybe the niche you're looking into. And we have Sarah saying that it's actually the economy, the macro view. Yes, I like that. I'm also trained in economics here. I like that as well. But no, this is not the single consistent factor that I'm looking at in the entire journey. All right, Uncle Fu here, his view, he only selects company with positive financials and he prepares to hold the stock. Okay, Uncle Fu is the closest here at the moment now. And we have Enrique here, correct. Your mindset. If I may just more specific here, I'm looking at the case whereby more important than the stock, more important than the macroeconomics, more important than the business, and the entire outlook itself. It is you. It is you. Because it is you who makes the decision whether to buy. It is you who makes the decision whether to sell. It is you who chooses to manage your positions, which has more than 50% contribution factor to whether you are making money from your trades or from your investments. Okay? So now, in order for you to be able to take benefit from today's session, you must be able to understand what are you. By I mean, what are you? I'm not referring to your race. I'm not referring to your gender. All right. There is some basis in terms of genders that I see from the friends that I brought along to start their investment journey. They do have different limitations. They do have different skill sets and also advantage they have. But more importantly, you need to understand between three. Are you a trader? Are you an investor? Or are you unsure? Okay. Again, between a trader, an investor, or are you unsure? Okay. I don't think I need to explain unsure, but if let's say for a trader, if you're a trader, you're engaging in like short-term positions. You're looking at maybe anything from less than a year, anything less than a year. So if you do a weekly trade, you do a monthly trade, you do a 3-month trade, you're still a trader. All right. But if you're an investor, you're willing to hold on to stock for more than a year, more than 3 years, more than 5 years. You're looking at years. Your time frame is looking at years itself. So before we look at today's stock, you must understand. You must be very, very sure. What are you? I repeat again, this is very important here. You must understand what are you before you look at today's stock. Fastly. All right. Yes, we do have the fourth type. Yes, the tips follower. This is what I call the unsure types because they just want to make money. Nothing wrong here. Myself, I like to make money. That's how I started to know Terence myself. But as I slowly get to pick up my skill set and I slowly knew that I was somewhat like an investor and a trader in a hybrid manner. But of course, I know how I manage it here. Okay, so we also have a page whereby for Sarah, you say that you are a trader and investor depending on stock. Yes, all right, this is also a good one because you know that you have a basis for deciding that. By Sarah, when you say that, I mean that you have parameters that you have for you to decide whether for this stock, are you going to do trading? Are you going to do investing? Good. This is very good here, Sarah. Okay, so now I'm going to go straight into that. You see, now if you're not sure, after I shared the parameters, the definition of the three, if you're not sure, I need you to do the first step. There's only 2 steps. For Fastly, first step is stay away. Don't do Fastly. Okay? Stay away from Fastly if you're not sure whether you're a trader or investor. All right? For the second step is stay far away. Stay very far away from the stock if you're not sure. Okay? Because this is not a stock for the faint-hearted. This is not a stock for the weak-hearted. If you're not ready, if you don't know how, if you don't know yourself, then I will tell you, for the sake of your sanity, please don't. Please don't. All right? Please do not try this at home. Okay. All right. So between the traders and investors, the rest of you out there, right? So yes, we will be looking at the numbers. And if let's say, for example, the numbers make sense to you, we will scan for opportunities. All right. So I'm going to go straight here. But before that, the mini games we're going to be playing today is a game called Count the Colors. So as the session started, in fact, for most of our viewers who have been following our session here, you notice that my slides are color coded. The headers of every slides actually has a faint blue, or what people call cyan, or a faint pink. For me, it's pink. I'm a male. All right, so we're gonna play count the colors, and then at the end of the session, you tell me what is your view of the company, right? Because the colors indicate my view towards that aspect of the fundamentals that we're looking at. Okay. All right. So let's start here. All right. So these figures are actually taken from Morningstar, and this is for the Fastly as of 16 October, the one that is just taken this morning. Now we look at the price book value. Very clearly, we see an excessive price over X, which is price book and price sales numbers. 17 and 36 is too high for me. Right? We need 17 years and 36 years for you to be able to break even in terms of the book value as well as in the price value. Now, for book value itself, right, there's also another these price book as well as price sales, right? They also indicate an what I call an enthusiasm, the level of enthusiasm from the market towards the company here. So I feel that in terms of at 17 and 36, right, this is too much. A lot of the price that is in the company is actually the enthusiasm, the people's positive feel about it, the feel good factor here. But for feel good factors, it can change very fast. That is why we see a drop of 30% overnight in pre-market trading. This is my view. Okay. Now moving along, we see that this is an infant company with no 3 years data. What I mentioned earlier, this is only 1 year data, maximum 2 years data here. So we can't really look at that. So, and it's an infant company, there's a lot more you need to look out for. All right. So then this is a typical growth company. Why so? You see, the typical growth company will have very weird quick ratios, current ratios, interest coverage. They don't necessarily make sense. They could have a lot of funding. They could be paying a lot of interest depending on the model of the funding. Are you a debt funding? Are you equity funding? There's not much that we can make sense of this other than the fact that maybe we can try and see whether the company has enough to account for its short-term liabilities here. So at this moment in time, we are still pretty stuck. And I hope you've been following the colors here. I'm just going to flash it backwards for a while. All right. So 1, 2, 3. Okay. All right. Again. 1, 2, 3. Okay. Okay. Now, next one. Company is not profitable now. Okay. It's an infant company. It is understandable. It's not profitable. And the fact is that across board, returns to assets, return on equity, return on investor capital, and their margins are all negative. All right. There's nothing positive about this part at the moment now. So in fact, actually, as I was looking at this, I was thinking, why am I still looking at the stock? But never mind. Let's see whether what is the takeaway we can do from this stock here. Right. So follow closely on the colors again. Now we see in terms of net income here, the net income numbers for the company has been falling. Right, has been falling in a sense between 2018, 2019, and as well as the trailing 12-month numbers here. This is not really a good sign in terms of an infant company. In fact, for any company, it's a bad sign here. But we can give it a bit more leeway if it's an infant company, but we need to see whether it didn't make any sense in terms of whether the reasons for that here. Now, the official answers, the official explanation that they say is that, oh, they are big clients, they are their most biggest client here actually stop giving it as much business in the sense, and they're not doing it as well. But it does leaves a lot more to be decided in the sense of how the explanation is given, because quite a number of different comments in the net has said that it is not the case that its clients are slowing down. It's just the case that the clients are not giving them business. That means they are giving the business elsewhere. So being a supplier to the clients here, they might be not seeing the same level of goodwill from their clients now already. So in terms of net income here, this is not a good sign we'll be looking at. Now, follow again the colors here. Now, next one, we see in equity size. Yes, this is a good sign here. Right, first of the cyan, okay? And we see that in terms of total equity, it's actually growing quite highly, very sharply. Equity grew up from 250 to the 500 regions. Now, this is this is more than double here. Now, the thing is that, right, for accounting wise, we need to see whether because there will always be shifts in terms of assets, liabilities, and debts. These three will always shift. the simple way to actually look at it is look at equity as well as to look at equity per share. All right. Yeah. But the thing is that this is an infant company, so we're just trying to make do with what we have. And we, by our process, looking out for red flags and we eliminate whether this company is worth our time to be even looking at. All right. Moving along here. Now we see that the cash flow situation for the company in terms of the cash flow statement is also not looking too good. Right. In the trailing 12 months numbers here, we see that the free cash flow is actually going down by another 7 million. And we see that in terms of that, you also see that in terms of financing, the company took on more financing cash flow. They took a positive financing cash flow. They took more money for the financer. So we're gonna be expecting to see for the future statements, financial statements, more interest to be payable by the simple assumptions that these financing are actually done on a loan. All right. So we're not exactly sure the structure here, but let's just keep it that maybe it's going to be in interest here. Now, moving forward, we see that price earnings, price book is actually 14 and 5 times of the index. Just take the numbers, divide by the index. Price sales, divide here. Price book, divide here. This is too high if you ask me. Okay, now, why so? For me personally, I look at the premium, which is the excessive amount percentage of the current price book and the price earnings, of course, the price cash flow if it's available, against the index and against the 5 years, and against the sector if it's available, to see how much enthusiasm is being priced into this company. Now we see the case whereby we look at 1,300+% of enthusiasm for the price earnings region, and we're looking at about 400% in terms of the price book, which to me is too high. I mean, I'm looking at, let's say, for example, if I'm looking at a case whereby I have a 5-year average numbers to be referring to, and I see that, okay, hey, it's not too far off from the 5-year average numbers, I'll be feeling more at ease. And if let's say, for example, the sector numbers that show that, oh, this is not too far off, I will also be feeling more at ease. Now, this is not the case. We're seeing the case whereby I only have index, I only have the current numbers. So this is not something I will really want to look at for a long term. All right, moving forward as well. Now, we also use a range of different services we use that, for example, in this case, with Simply Wall Street website here, we use them for assessor screening to try and speed up our process here. Now, this is exactly summary of the company itself. Now, because this is the other, just a summary here, I'm going to keep it neutral. This is not going to count towards our mini game. So I hope you're still following a mini game and counting the numbers here. Okay, now very simply, you look at the risks that they have highlighted here. Number one, earnings are forecasted to decline by an average of 12.9% per year for the next 3 years. Now I'm going to ask you this: is the company already profitable? First question. All right, rhetorical question. Okay, it is not profitable and not forecasted to become profitable in the next 3 years. Are you a trader or an investor? Is this question not important now? Okay, now. Then we'll be seeing that high volatile share prices in the next 3 months and significant insider selling for the past 3 months. Now, of course, we see that, okay, if I'm going to look deeper into that, we see revenue is forecasted to grow, but earnings are forecasted to decline. So if revenue goes up, earnings go down, it only means one thing: the company is expected to make use of its resources less efficiently in the same period in the next few years, next 1 year at least to say. All right, here. So at this moment in time, right, do we have any questions from our viewers here, so that I make sure that we do not lose you? Any questions pertaining to what we've seen so far? Because this is going to be a very heavy one before I move on to the second part here. If you have, just hit the comments and just leave a question here. Meantime, let me just get some drinks. Terence, you have anything you want to add as well at the moment? Terence, you're muted.
Thanks. I've always said I'm never a growth stock investor. I'm always a contrarian. So from a fundamental standpoint, I definitely have no views on the stock. And one thing it's for sure, SaaS is the hot word right now. So software as a service, right, is the hot word and the hot stock right now. So anybody who has business in this scene, this arena, is just being, how do I say this? It's just being bought into without any real depth or analysis that is given to it. So I think remember we did a session and we brought out this company called Groupon.
Yes.
Yeah, all right. And we said that, it was a novel idea. The whole idea was great. They were the first movers. But the problem with their entire business was the fact that there was no barrier to entry. Right? There was no barrier to entry. And soon we saw enough, there was too much competition.
All right.
Yeah, okay. And when too much competition came in, all right, it started eating into the business.
Sure.
All right. And if you operate any business where you cannot distinguish or you cannot differentiate yourself from the others, you're always going to have a difficult time. I mean, we can
You're
always
right,
see
actually.
it this way. Yeah, I mean, we can always see it this way. What made Apple so special? Because Apple is one of those stocks that, until today is still defying all odds, defying gravity. Why? Because they've made themselves special, right? Just how do you know they made themselves special? Just by them not offering charges and not offering just by them not offering charges, not offering earpieces, and they can still get a massive queue for their latest phone that's going on. Despite everyone that's going out there, all financial blogs giving you reasons why you don't need an iPhone 12, right? But the queues are already happening.
Yeah. Okay.
Yeah,
right. Let's take some questions here. We have a question from Jeffrey. Jeffrey saying, "Isn't this the same as Amazon in its early stages?" Jeffrey, I would, yes, you are right. You're right. Okay. Now the thing is, if I remember, I did cover Amazon very briefly in one of my sharing before, and I think that we're looking at the case of, I think it was 15 to 17 years thereabout, or something around that range, at least 10 years for Amazon to be able to become profitable. That is why the first question I asked earlier, are you an investor or a trader? It is very important here because it will set the decision matrix very clearly for the viewers here. Now, I didn't want to go straight into the company here because I am not sure in terms of the dynamics whether you are a trader or investor for our viewers. If they are a trader and they take on the stock with an investor mindset, or it should have been intended as an investor mindset, then it will be snatched and they will be in for some world of pain, right? So I want to reiterate in the sense, right, for every startup here, they always look the same in the first few years. Mostly, there will be some anomaly. We've seen IIPR that we shared in one of our sessions here. It's already making a lot of money here. Yeah, so the thing is that we are looking for red flags. We're looking for things that tell us that, no, this company is not suitable, or we're looking for the one niche, very niche areas that tells us that this company is the right one. And we're trying to see whether we find that for Fastly. All right. So we also have questions from Jason. Jason is saying, for tech stocks, we need to consider more qualitative factors supported by numbers. It's only a game for growth and aggressive traders. Yes, Jason, you're looking at that. Yes. But for Jason, the thing is that for stock Nit-Picking with IMP, with us, me and Terence, is that we are not going to be doing a fully orthodox manner. We'll be sharing in terms of more logical manner, in terms of your thinking process. How do we actually review a company? Mostly is by process of elimination of red flags. And we try and minimize a little bit more on the more aggressive kind of number crunching so that we don't put our viewers to sleep here. All right, here, yes, but you're right here. If you can do that, yes, by all means, you should do that. Yeah, but we're looking at more in terms of the more user-friendly style of a fundamentals approach, which relies more on logic and reasoning here. All right. Sarah, a question on whether any clues that will contribute to the revenue increase. This is a projection. They're projecting that the revenue itself will increase in the next 1 year. Yeah, this is a projection itself. So projections and actual can always have a disparity, right? So we don't have a full clue here. Now, Uncle mentioned that there are many cloud platforms in the market. Why make Fastly different, right? So yes,
that's precisely the biggest problem that they have right now.
Correct. Yeah. Okay. And so let me go. Yeah. Sorry, Terence.
I just wanted to add, there may be a lot of traders out there who's gonna flame me, fire me, and hate me for the next statement I make. But honestly, I see this as the next problem happening to Zoom as well. I mean,
right, yes.
don't get me mistaken. I love Zoom. I have Zoom accounts. I have paid accounts, and
Same.
I do agree that they are very functional.
Mm,
But you must understand, once the world sees the pie, all right, everybody's gonna come in for it.
yep.
All right, and nobody is gonna stop. Nobody can stop the rest from coming in. All right, and we can see that this is already happening. This is already happening to with Google,
Mm,
right? I think Google made a move this week, right? They made I think their own Google meetings the primary on their Google Calendar,
mm.
all right? So Zoom
Ah,
meetings, yeah. So Zoom meetings are no longer the primary webinar on their calendar, right?
I
They
see.
they've I think disabled it or something like that, and they made their own Google Meet as the primary one on their own Google Calendar. So,
So,
these are all little moves that, companies can make because they own the whole habitat, like
mm,
Google, right? They own everything. All right. And it's not as though they don't have like cloud meeting platforms they have, right? But Zoom has probably awoken them and see the whole potential behind it. Oh, and of course
mm.
together with the new economy.
All right.
Yeah. Right. Let's get back to
Okay.
your topic. Let's go.
Sure. Yeah. Yes. Actually, Enrique, you're right. It's the flavor of the month. So it's always the case. Whatever that sells the headlines, they will have the flavor of the month here. So let's go and take under Simply Wall Street, the value. Now, always take this valuation with a pinch of salt. The only way I can describe this is that the current price is light years ahead of its fair value. Period. Light years ahead. Fair value is projected, calculated by the website at $2 plus. Current stock price is $80 plus dollars. Does this scare you? All right. So we also have negative forecast for future earnings and revenue here, right? And this is the most important part that I have spotted. I appreciate on this whole screening here, which is net insider selling here. Now I want you to pay close attention to this. You see, in the last 3 months, there is net insider selling worth value of 58.9 million. Let's just call it 60 million. Okay. Now in the full year, there's the insider buying at 24.9 and 24.3. So if my math is right, we're looking at 25 plus 24.2, which is let me think, 47.2. 47.2 meeting, yeah, no. 49.2 million. All right, so it is still more in terms of the total net insider selling. And we haven't even counted the ones that is actually happening in the later 2 quarters here. Now, what happened? Who were the ones? We see here, all of these individuals, they are either in the board or they are the independent directors of this company. And what price point were they selling at? $77, $97, $90. All right, with the most relevant selling would be the 77 and 59 being present now. Now, I need you to understand, I need you to reason out with me on this case here. Now, there will always be information that is not available to us. This is the stock market. We are working with an imperfect knowledge kind of a situation. People who are in the inner circle of the business, they have a little bit more information, so they have a less imperfect information scenario. Now, we are trying to guess why are they selling. It could be just a pure business decision. They need to do that because of the agreement that they have, right? But let's just try and rationalize this. You see, okay, all of this selling, 77.59, they take place in between the due dates, 21st as well as the 20th of August this year. All right. And when did we have the announcements? Sometime in October, mid-October this year. Now, I need you to ask yourself this question. For a company of their scale, how long does it take to prepare a financial statement? Is it going to be a 1 month? Is it going to be a 2 months? Or is it going to take longer? I need you to roughly have a feel of the reasoning process why I'm trying to drive at. Okay? 1, 2. Let's just plot them together. See, this is Joshua Bixby, CEO Director. Joshua. And then we have Sunil, Independent Director. Sunil. All right, so David as well, lead independent director also. Okay. So these are the people who are actually the true insiders of the company that are actually selling at either 90, 70 plus dollars. And let's see. Now, under the Thinkorswim, no, sorry, the Thinkorswim platform, too much broker. Thinkorswim platform here, the price for the book value or per share is $2.72. And I had to look at it again. It's really $2.72 for the book value per share. And this is a stock that's worth $84. How much are you willing to overpay in the event this company does turtle up? Mind you, this is a company that does not even have a 3 years annualized data for its growth, meaning they do have 4 years worth. Okay, so how firm are you to believe that this is a company that will make it in the long run, right? I'm not saying that it will not, but what I'm trying to say is that I don't know. I cannot say something I will know, all right? And let's see. Let me try and check, just a second. Now, if you look at the share prices that they have been selling, sorry, how did I get the insider trading data? Okay, let me go into that later. Okay, so if you look at the insider selling prices that we're selling at versus the current stock prices now, $84, right? All right. Okay, you want to know how much of the 100% share. Let's go into that. Just a second, yeah. Okay, I'm on Simply Wall Street. Okay, so you want to see percentage? Sure. Let's look at maybe the person who Sunil. Let's try and see whether we have them. Sunil. Nope, not showing. And then we try and see whether you have a David. Nope, not available. And we see whether. Okay, let's try the CEO. Okay, let's see, right? Let's try the CEO here. Joshua. He has 16.9 million worth. 16.9 million worth. And let's see how much he sold. Value wise, 3.5 million. To me, it's a significant amount. Yes, this is simply Wall Street. Okay. Now the question to ask you today, again, back to the very first question. Are you an investor? Are you a trader? Or are you unsure? If you're unsure, stay far, far away from this company. The stock is now trading at $84 with a book value of $2, meaning to say the stock does turtle up. For every $84 you put in, you only get it back $2. All right, you can buy a McChicken with that. If you still get back it after your stamp duties, I'm not sure. 1, 2, the insiders are already taking profits or are they already stopping loss? I'm not sure, but they have been selling at $70 plus. This is a stock at $84. If you're a trader, that means you're taking a short-term position. Can you find any position that gives you premiums if you're doing an option for $70 plus and below? If you're going to be selling anything? Or if you're going to go into stock, that means you're going to do a trading position on the stock. How certain are you? Because on one hand, you have a case whereby this company is very, very much driven by the enthusiasm of the market as a whole. Yes, everybody here is actually into this session with Jeremy and Terence because, hey, this company went up very high with the whole year, from $10 all the way up to $100 plus. And there's a 30% discount now because of the beat. We should buy in now. One hand, you have an up. The other hand, you have a down because a $2 book value, $77 insider selling. So are you ready to gamble with the kind of uncertainty? I'm not. So you can probably tell from the mini game I've shared is that you will see more reds, more pinks than the cyan, the blues. Okay. Now, if you're an investor, sure, I love that. Okay. Question now is, at $84 per share, how much are you willing to suffer in paper losses before you feel the pain, before you feel the need to cut loss, and then you start to achieve a break-even point in don't know how many years? 3 years, 5 years, 17 years. In the meantime, from the last 14 sessions we have shared, there are a lot of different stocks that were suitable for trading, suitable for investing, that I'm sure if we were able to continue these sessions, if our schedule permits, both myself and Terence, and the travel restrictions don't open up so soon, we will be able to find something more with a higher probability in terms of maybe less risks, because my preference is something less on downside, more on upside, buy side of probability. I play with implied volatility, I play with implied volatility cones, Terence supplements with technical analysis. I look at fundamental numbers, I look at the long-term trend, I look at insider buying and selling, I look at accumulation of funds, that kind of thing. So for me, when I look at this in the quick 5 minutes, I will tell you this is a 5-minute trade on top. In the whole sharing, about 40 minutes that I've shared with you, because I need to run through the whole thing with you. This is a 5-minute trade on top in my hotel room on my bed earlier, that no, this company is not something I will want to do. This is not a company that I can trade, I cannot invest, and certainly if I'm not sure, I will stay the far away. All right, so with that here, Terence, do you want to take it up on the technical analysis part of this company?
Sure. So you got nothing to suggest at all because you're staying far away from this stock, right?
I'm staying far away because it just doesn't make sense to me. It's like,
Okay.
if let's say, for example, I'm looking for a trade, I can get my trades from blue chips.
Okay.
Right? If I'm looking for an investment, there are companies with a lot less downside that I can put my dollar in. Just maybe, for example, one of those. This is not a stock tip session, okay? Disclaimers earlier still applies. Nokia is at $4 and $5 a share. And I understand the business.
Yeah, but you must understand it's a stale flavor.
Yes. So
the flavor has
the
gone
thing
stale.
the thing is, and I'm sharing this with a very recharged mind, is that the thing that annoys me is that a lot of people always look at returns. They say, how much return am I generating? How much return am I generating? Am I generating a 600% in how many times? Okay, so now then I ask them, how much are you losing? How much are you trading in terms of the risk to your reward? I don't think a lot of people can actually answer me that question. If I ask Terence, maybe he can. Yeah, because he will know lah. Yeah, but
I mean, let's just take it from a cloud view. You know, basically investors, when they go into the market, they are all driven. They're all driven by the greed side. All right, very few people are. You know, unless you have really been burnt until you're charred before, you know, you need to be burnt until you're charred, you know, then you actually start to look at things from the risk point of view. And you know, by all means, let me also be very fair. You know, if you are a very skilled trader, you know your emotions and you can keep your emotions in check. By all means, go ahead and trade this stock.
yes,
You know, go ahead and trade this stock because you have your cut losses in place and you're in full control of your cut losses. But you must understand, if you're a retail investor and you go by emotions, and then you have trade how do we say this? You have trade decisions where you go, oh, you know, it's hit my stop loss. Maybe I'll wait another day and see. Maybe I'll wait another. You know, if you're those kind of traders, then I agree with Jeremy. You have to stay really far away. All right now, and you know, pardon me for taking the back seat because Jeremy had, you know, a very strong opinion on the stock, and from my background today, you can also see I'm not at home. Yeah, I'm not at home. I'm on the move. So I parked myself in a small little spot, get my laptop balanced on a small little platform over here. But things get going. Yeah, all right.
yep,
As promised, you know, things get going. Now, so let me bring my point of view up. I am purely balanced on this view. So let me bring it up from the charts side. Okay. Now, so from the charting side, I have a very big problem right now. Okay, I have a very big problem with the stock. Not that it's very negative, Okay, not that it's very negative, but if any of you are trained on candlestick, all right, what you have right now is a Marubozu or something like that. It's a Marubozu candle. All right, now, so what you have is basically we have a reversal candle. And the problem with this reversal candle is the duration of the chart I'm showing you. All right. The what you see right now on my main chart, it's also what we call like a standard deviation or regression channel. All right. So what it does is it actually tracks the extremities of a move. Right. And no matter how you want to say it, okay. I know, when people talk about growth stock, you say, it can go longer and bankrupt you before it can turn around. I agree with that. Okay, but if I load different stocks on this linear regression, let me just show you. Even if I load Tesla over here, all right, you can see Tesla is like right up there. But once it hits up there, can you see that it's providing a lot of resistance? All right, it's providing a lot of resistance. All right, and if I change it to Apple, look what happened. All right, look at what's happening. This is a very special indicator. All right, and you can only probably find it on paid subscriptions, but it's amazing. It's very amazing that TD Ameritrade platform actually provides it, as one of their platform indicators. It's totally free if you have an account with them. I'm not selling them. I don't get anything from them, but this is, something that I find that's really, really useful. Now, yeah, I think, no, not SEA, but SE, I think. Right, even a very popular stock like, C Limited, right, it's hitting the top right now. So it doesn't mean that it can't go higher, all right? But what it does mean is it's starting to show problems. And even for C, all right, now, let me show you something on C over here. Look what's happening. The big problem right now is really this. You have C right here, right, who's climbing higher and higher and higher, right? And then you have divergence that is happening on the RSI indicators, right? And this is happening consistently, right? It's happening consistently. So it's not turned yet, right? But when it does turn, all right, it's going to get ugly, all right? It's going to get ugly, all right? And if you actually think that you can get out before it's too late, you won't, all right? You won't. Why? Because you can't get in before the others got in, all right? Because right now, what are you trading against with, right? You're not trading against with just other retail investors. No, right? Trust me, the funds, all right, they are not in the picture at all right? But what you're doing right now is you're trading with algorithms, right? You are trading with computer systems that are firing these orders, right, at a much faster rate than you are, all right, and you possibly can. All right, so we have this, very concerning candle that I have, and the problem right now is also happening on a weekly chart. Right, and if this is happening on a weekly chart, on a daily chart, right, this is already a reversal signal. But on a weekly chart, we all know that the longer term trend always surpass the shorter term trend. That means, the weekly will trump the daily. The dailies will trump the 1 hourlies. All right, the 1 hourlies will always trump the 5 minutes. All right, because of just the duration. All right, and you're seeing the same thing happening right now. If you see on Fastly over here, it has gone up to a higher high, right? But there were already warning signals, right? There was already warning signals over here, and now we have that turnaround, right? And the RSI actually turned around and cut the overbought levels from the top down back in, right? So what's going to happen right now is this, right? Remember, when on its way up over here, right? It cycled. That means RSI cycled from the top, from the bottom to the top. All right, and right now it is from the top. All right, so which means we could actually see the RSI cycle all the way from the top back to the bottom. It's going to happen. I don't know if this is going to be the trigger. This time it's going to make it happen, but it's going to happen. All right, and let's just have a look. All right, let's just have a look. Just trying to have a projection over here. I have other forms of projection, but just let's just try to have a projection. Yeah, reverse engineering RSI. Okay, now, so I'm just going to reverse engineer the RSI, and I'm just going to assume that if RSI were to go back to 30, okay, all right, if it were to go back to 30 levels, all right, what's going to happen? All right, I'm going to make this line thicker a little bit so you can see it. Okay, let's go. All right, now, and oh my goodness. Look at the downside, everyone. Yeah, all right, I'm not saying it's going to go there. All right, but this doesn't make sense, of course. All right, it doesn't make sense. But can you see the severity of it? All right. Okay. The severity that it brought it up. Okay. It brought it up over here. All right. So the stock went up that much higher. Now, if the RSI actually were to cycle down, all right, it's going to bring the stock to a negative. It doesn't make sense, right? But that's how severe it is. Yeah. All right. Okay. Now let's just change this to a daily chart. Okay, if I change it to a daily chart, it still points towards, cycling over here to about 56. All right, 56. Yeah, okay. All right, now, so even on the daily charts, right, you see a problem right now. Okay, the problem is, right, we had the breakouts. Okay, we had breakouts over here, and then it turned out to be false. So it came back and then it channeled for a while. All right, and then we had the second breakout over here. This was a little bit more convincing. All right, okay. Now, and then we had, can you see that reversal candle over here again? All right, just in case all of you can't see over here, you have that reversal set of, okay, you have the reversal set over there. All right, now, so if you wanted to get in, you might have gotten in on the very closing of this, you would have a really good trade because the very next day it gapped. Right, but now that it gapped over here, can you see somehow it just gapped and it moved back into this zone? So just from this standpoint, right now we could see, it do a reversal on Monday, right? But if it does hit the top of the channel, I believe, okay, that if it goes back to the top of the channel, right, you should be looking at bearish positions, right? Just based on what's happening right now, we have a reversal on the weeklies, all right, and then we have the dailies that have just cut back into a channel over here. All right, now, so the normal chain of thought will be going up to the resistance and then coming back to the bottom of the channel. Yeah, okay, but yet again, I would really stay far away at this very moment. Right, I agree, Jeremy. Why? Because I can see clearly on my chart that there's earnings around the corner. All right, and earnings is going to happen on the 28th of October. Okay, so that itself is going to be a binary event. More so when the company has already given, sounded out a flare, all right, to their earnings that is about to come. Right, they may have done this for a reason. Right, they may have done this for a reason because it may look at it this way. All right, it can be purely binary. Okay, but I think they're not silly enough to do this. Right, that means, all right, if I'm using my analysis, I'm thinking that this quarter numbers may actually look very bad. Right, it may actually look very bad. So that's why they're sounding a warning ahead of time to soften the actual blow. Because if they don't sound a warning like that, the stock may climb higher. And when they announce it, it's going to be a rude shock. All right. And if it's going to be a shock that is detrimental enough, all right, the stock may be crushed. All right. And the problem is this: when the stock is crushed, right? When the stock is crushed because of the earnings, and this stock is so new, right? Okay, it's going to have a very detrimental effect. Right? Because all the computer algorithms are just going to switch side. And when they switch side, you're going to see a total reversal because they bought all this up. The algorithms made this move, right? They made this price move happen, right? So if they are on the other side now, they are going to drive the stock down, right? And, as much as I like to say it over here, okay, as much as I like to say it over here, as much as I don't like to say it over here. Okay, I have no choice but to bring this back. Yeah, all right, I really have to bring this back. Look, all you need to do is to just look at this again. Yeah, all right, all you need to do is look at this. This stock, Juniper, went from 50 to 200. All right, back then in 2000, their algorithms may not be, that strong. All right, so it actually took a while. Right, it actually took like almost 6, 7, 8, 9, 10 months. It was a crazy phase as well. But it went from 200 back to 20s. Right, it went from 200 back to 20s in about half a year, and that's a period when there's no algorithms. If the algorithms are doing this, it could have happened in the next 1 month. It could happen in the next 2 months. Why? Because they're just constantly firing orders off. Yeah, okay, they're emotionless. You must understand, computer programs are emotionless. They don't feel, they don't think. Yeah, all right, they're just firing and following the movements. So if that's the case, right, you have really got concerns ahead over here. Unless the earnings turn out to be really good, right? That means it was like a smoke screen from them, right? They wanted to bring the stock down a little bit, all right, and then to let it go back up again. It may, I don't know. because earnings is always going to be binary. But I think it makes a lot more sense to just wait out until the earnings is over. Anyway, it's like what, another 10 more days. Yeah, all right. Wait out until the earnings is over. Let the sky clear up. All right. And once the sky clears up, you might have a better opinion on where the stock may be going next. Yeah, all right. So even from my point of view, like I said, if I were to go back to the dailies and FSLY, okay, if I were to go back to the dailies, right now I'll be trading based on this channel, which means if it hits resistance, it should be coming back down. Okay, but there is a binary event happening, which is earnings. So that's why I'm not touching it yet. Okay, so let's say earnings comes out over here, and then earnings happens, and then the stock, okay, the stock gaps, okay, the stock gaps, and it moves lower. All right, if the stock gaps and it moves lower, right, what I'm going to see happening over here is the fact that it will start to move in the next set of channels, okay, which is somewhere here. Okay, so we have the top over here at about 50, all right, and the bottom over here of about 25 to 50, right? So imagine if earnings really turn out bad, right? That means the sell-off will happen, all right, and there's no support levels. There's absolutely no support levels that people can base or judge on. So the selling is going to continue. The algorithms are going to continue selling until they hit 50. All right, until they hit 50, if they can find a support, good, they may bounce from there. But if they don't find a support and they sell through 50, all right, it can actually get very ugly for this company. All right, and you consider this thinking from outside the box. They have no leverage. They face competition from other companies like Cloudflare, from Google Web Services, and then clouds are also what Amazon is trying to build right now. Microsoft is also in it. All right, even the China biggest ones, Tencent, is also in it. Yeah, all right. So it's a lot of concern. All right, I have a lot of concern when it comes to this company, and more so when they sounded out that their earnings are going to drop because of their biggest customer, and we all know this. Their biggest customer is none other than TikTok. All right, and by them sounding a warning, it made it seem like TikTok traffic has been dropping, possibly because people think that the US, the America side is pressing on them. But if you go and look at statistics, TikTok volume is just constantly going up. All right. Okay. It's just constantly going up. All right. Now, and that simply points to the direction that even TikTok as a company itself, all right, is probably spreading their resources. Right. They're not giving all their business to just one company. Yeah. Okay. They're probably going to some other companies as well and giving some of their regions into perhaps some of these other services. Yeah. All right. Be whether they're diversifying their risk in case something collapses or what, but they're making a smart judgment over there. But if that's the case, right, and it causes Fastly to actually sound a warning, that means Fastly is very dependent on this one big company as well. All right, and if this one big company takes any part of their business somewhere else bigger, then it's going to be a problem for Fastly. So things look good now. All right, so like Eric mentioned earlier, it's the flavor of the month. So as long as it stays the flavor of the month is great. But this company could very, very quickly fall into the fate of Groupon. All right, it could very quickly fall into the fate of Groupon. Yeah, all right, because if it's one biggest niche is broken, in this case, one biggest customer, if it ends up being broken, it could be torn apart very quickly. Yeah, all right, now, so that's just my take. Okay, Jeremy, back to you.
I just want to add one thing. I was thinking how we can maybe just add one more layer of perspective for our viewers to crystallize this. Okay, let me try and share my screen here.
Jeremy.
Yep.
Jeremy, I have to apologize because I just saw my laptop and my Mac. My Mac is like running on red zone on battery right now.
That's fine. If you go off like Ultraman, I'll handle the show.
Okay, but I just want to answer the Facebook users question right now before I go.
Sure.
I'm not sure about which indicator you're referring to. Okay, I'm not sure.
I think it's referring to the range. The range of the two
range.
parallel.
The range. Yeah. The range is just linear regression. Right? It's just linear regression. It's basically a mathematical model, but TD Ameritrade made it plottable on their charting function. All right, so you can just go to indicator, go search out linear regression. All right, Jeremy, over to you.
Okay, just one small thing. Right, what you're seeing now is actually fastly, and all these horizontal red lines are actually all the price points that the insider have sold. Right, so we have here, so if I can help you, at $84 plus, and this is the price point I was saying that we need to defend, $77 if you were to go into the stock right now, which is one of the prices that the insiders have sold at. Now all these 1, 2, 3, and 4, this is the 20, 60, 120, 240 days moving average. Now, for our viewers who have heard me share before the theory of how do you understand moving averages, I'm looking at simple moving averages. Think of it as every 20 days as a month. So this is the average price that people have been paying for the last 1 month, average price that people have been paying for the last 3 months, 6 months, 12 months. So it means to say any price that is above this level and they sell, they will still have a profit. So now we are approaching the 6 months moving average from top coming to down. Once we go across this and go into the 6 to the 12 months, the selling pressure should theoretically be higher because we have see more participants. 1. 2, if I can just back off, you see it was $10 back in March this year, 7 months ago. How many of our Robinhood traders being people who do not have much concept, they do not have much training, they just jump straight into the stock trading using Robinhood app. That's how their name came about. And how many of them will have actually had Fastly in their portfolio? I don't know, but my best guess is quite a number of them. So at $10, and you see that when the stock drops from 100 to 80, maybe they will still defend. But when we see the stock prices move closer to 50s, my tendency to believe is that they will be less inclined to defend the stock. So this is one of the reasons why I'm not in favor of taking anything for the stock.
But
Right.
let me Jeremy, before my battery dies, right? Let me provide let me provide maybe a positive but yet another negative. Depends on how you look at it.
Sure.
Okay, now if you look at my chart right now, just for the sake of the technical people, all right, if you want to really add in a Fibonacci, you can add in a Fibonacci over here. All right, okay, and you can see that you know, on the Fibonacci, I'm just gonna take myself off the screen. Okay, so you can make it bigger. I'm really starting to lag right now. Now, so you can see that on the Fibonacci, right, what's happening right now is it's on the borderline of the 38.2% retracement. All right, and actually the 38.2% retracement price is about $87. It has already broken below that. So we all know that after 38.2, right, the next strong level should actually be 61.8. So, you know, if it does fall to 61.8, that brings us back to that 57 support level. Jeremy, you remember I mentioned it just now?
Yep.
That means if this zone is broken, right, there's nothing stopping it until the next bottom zone, which is $57. So yeah,
Well.
so yeah, so I mean, it like I said just now, wait until the earnings is over. I think there's just too
Yes.
much risk. There's just too much risk of the unknown right now. If you need to trade this stock, you should wait until it is over. Now, just for the sake, for those vested, I forgot that there are people that are vested right now. Okay, what you should be thinking right now is protection. That means if you have a
Yes.
position in the stock, you should be thinking of how different ways, whether you use options, whether you use whatever it is, think of how you can get yourself a short-term protection with all these earnings coming up. Why? Because if earnings turn out great and the stock shoots back, you know, if earnings turns out awesome and the stock starts shooting back above, right? All you lose is probably the premiums that you have paid to buy those insurance. Maybe with a puts, maybe a put spreads or something like that. Yeah, all right, okay. But you know, if you are wrong, all right, that's going to end up protecting you, right? So if you want to look at it from a low downside but a lot of upside over here, I think buying a protection heading into earnings, especially if you're still vested in the stock, would make a lot of logical sense right now.
All right, so just in case if there's any of you who think that, yeah, why not we just buy a put option on them? Now, the simple answer not to do it now is because
No, you
it's
can't.
pricey.
It's
It's
costly.
pricey.
It's
Yeah.
super costly. because we already say earnings is about to happen. Earnings is a binary event. All right. Trust me, the options market is not silly enough not to know that. All right. It's just like the American insurance companies. If they know a hurricane is about to approach, they're gonna mark it up. They're gonna mark it up. Yeah. All right. So that happens to options as well. Yeah, okay, it's already too
Right.
late, but you can think of using things like spreads or stuff like that to actually do it. All right, there's spreads, there's calendar spreads, there's back spreads. There's so many ways over here. Yeah, okay, and that's something seasoned option traders will know what to do. Okay,
Yep.
but it leaves a lot of general investors in the lurch when it comes to this. Because if you are now in this stock, you're vested and you're not making money. Unfortunately, because of this sell-off, you're now at a loss. You don't want to take your losses, all right? But you need to protect yourself. Okay, because if you're not willing to take your losses right now, it could get worse. It could get better. Okay, it could get better, all right, but it could also get worse. Yeah.
Which is precisely the reason why I did emphasize to at the start of the session, right? The most important factor in the entire journey is actually yourself. Because we have cases whereby we had a winning trade because of how our personality gets in the way. We couldn't manage trade to ensure that it stays profitable. We wanted to max it, but we didn't. It went into losses. So you need to understand yourself. You need to manage yourself such that you can take the decision that you're most comfortable with. Like over time, I would have been able to curb myself, be more cautious here. I'm not sure our viewers here, how aggressive are you? How risk-taking are you? You might want to actually squeeze more returns so that you take on more risk in the process here. So ultimately, you have to take a position that you are comfortable with, a decision and a direction you're comfortable with. And you will be at ease with when you sleep at night. I think that's the most important thing here. So Terence, you want to wrap it up? You want to wrap it up with maybe like a quick 3 pointers for this talk from each of us for our viewers before we check with them if they have any questions. So let me go first. Let me go first.
Sure.
All right. So we three of them is number one, when we trade stocks, we always try to stack odds. We want to stack as many odds in our favor as possible. Now, unfortunately for Fastly, we don't have as much of odds in our favor. It's just a lot of uncertainty, a lot of not so good news, a lot of too much enthusiasm that is priced into the stock. That is why we're staying out. So that's one. Number two, if you're already vested into the company here, you need to consider whether you are already profitable. One, if you are, you want to take profit, do you? If not, then you have to see whether you like to stop a loss here, just take a stop loss here. And number three here is that if you are considering to actually take what I call a opportunistic trade into the company during this period of time, it must not be a position that if you go wrong, it'll be catastrophic for your portfolio. Meaning you will not be fully all the way gone if you don't do well. Terence, are you still around with us? I think he's gone like the Ultraman when the buzzer goes off. All right. In the meantime, do we have any other questions from our viewers before we wrap up the session from the day? At the same time, if you do enjoy today's session, today's sharing, and you feel that you learned something new, you can also indicate here in the comments, or if you have any feedback, so you can also do that so that we know that you have done so, you have learned things, and we will be able to keep it up with this nature of sharing or something similar to keep the standards of our content up as well. All right. Anything before I wrap up maybe in 1 minute time? Oh, Terence back.
Hey, yeah, I had to access for my mobile phone. That's the only way, man. Yeah, my battery, my laptop really died. The screen went off for me, but the sound, I was still hearing you on a black screen, man.
Okay,
yeah,
your pointers.
Okay, anyway, my 3 pointers, right? Yeah, so I think my 3 pointers, the first one is always this. Whether we like it or not, we all know what Buffett does and how he invests. So the first thing he always says is one of the most important elements is the USP. Right? He uses this word called moat. Right? But moat basically just stands for USP. What's your unique selling point? Does this company have one? All right. Now you need to identify that, because if you are an investor, that means you are investing right now, you own stocks because you are an investor, you think long term, right? Then you need to find a USP. That's going to be something very important. If the company doesn't have a USP, it's as good as someone without a soul. All right, now, so it's going to be just a recipe for disaster. It's just a recipe for disaster over here. Now, if you don't believe me, just think Groupon. All right, just think Groupon. All right, now just think BlackBerry. There's so many predecessors. Yeah, okay, yes, software as a service is hot. As a whole sector is hot. But when a sector is hot, it attracts a lot of competition. All right, everybody wants a piece of the pie. All right, and how difficult it is, difficult is it to set up a cloud service? It's really not, right? Especially not so when you're already in the strength of Google, you're in the strength of Microsoft, you're in the strength of Amazon. Yeah, all right. Okay, now, so, they face a lot of competition, all right, especially coming from the big guns. Yeah, okay, and it's now just not only these American companies, they even have it from like what, Tencent, right? Yeah, okay,
Yes,
and Tencent
Terence.
is like, yeah, it's like one of the fastest growing ones as well. So there's a lot of headwinds. There's just too much headwinds over here. I think.
And let me tell you,
sorry,
Terence,
can you hear me?
yeah, I can hear you.
Yeah.
Let me just share with you. Over the past 2 weeks, right, I've been using Tencent cloud services. Just so you mentioned, you said Tencent, and then it hit me. The service I'm using is actually Tencent cloud services to communicate with my counterparts in China here, and I'm sending them files that are big. It is very, very powerful. The software is just fast as I upload videos. Yeah, so it is not too difficult for Chinese companies, for other companies to actually replicate it.
I mean, I think, Jeremy, let's not even talk about all these giants. All right, I think they even face their competition from their own fellow new kid on the block. I think it's called Cloudflare, right?
Yeah.
Yeah, all right. And if they are getting ahead, just think of it this way: if we are the new kids on the block, we are neck to neck. All right, it's like ego fest, it's like an ego thing, like we both started at the same time. If you're ahead of me, I'm gonna do whatever it takes to get back ahead of you, Yeah, all right. And let me just ask you this question: if we are both offering almost the same identical stuff, all right? If you are my biggest competitor, what am I gonna offer to your client to tempt him over?
Price war.
Yeah, and when price war starts, what happens? Everybody dies.
The margin is already negative.
Dies. Yeah, all right. So it's just how do I say it? It's just all right. Guess the color. I think that's the summary over here. Point number 2, guess the color, everyone. Yeah, all right. What's the color of the day? You had the flavor of the month. What's the color of the day right now? All right, now, and last one. I think the last point to take away: wait until the earnings is over. Yeah, wait until the earnings is over. Whether you're long, whether you're short, all right, don't get in. All right, wait until earnings is over. Yep. All right, Jeremy, I think that's what I have for today. Right now, if any of you really found this useful, whether you're vested or you're not vested, but you found today's discussion very useful, I think it'd be great for myself and Jeremy. Just leave a comment right now to let us know. Right, really to let us know that you really enjoyed the session. You think that you managed to capture some great value out of it. Right, so we'll be able to run these sessions in maybe similar context, similar ways. So because the whole idea, I keep telling you, Jeremy, for us, it's not so much for us, all right, but it's for us to bring value to all of you. All right, so
yes.
If a session like this, all right, a stock that is suggested by all of you, a stock that is picked up by all of you, if you found it is what you want, what you like over here, then we're more than happy to keep doing sessions like that, even when I'm on the move, man.
Yes, Terence, I'm gonna be shameless and ask this, man. If let's say I break short my vacation and I do this sharing, and I'm not getting appreciated for this, right? Then I really had to reconsider the whole session altogether.
No, you shouldn't do that. When you do that, right, then everybody's just gonna, how do I say this? Everybody's just gonna make you happy.
I'm joking. Now I'm happy to do this because I was thinking in my mind, like, hey, am I going to have the stock Nit-Picking session this Sunday? I was thinking, I better make the post. Yeah, so it was around the lunchtime period. So was the dinner time there about? Yeah. So I posted it, and yes, it's I mean, maybe I'm just a workaholic.
Yeah, no problem, man. I think we just have a passion for what we do in the stock market. So that's and more so being able to help people in our positions right now. So that's something that we really want to do. And
All
of course,
right.
with we can only do so much. That like Jeremy and myself, we can only set aside time to run such sessions to bring value and information to all of you. But we need all of you to help us by making sure that you share out this video. So if you really
Yes.
found it useful, like some of you are leaving comments right now, it doesn't harm you to just help us click the share button out there, right? And then leave a comment at the top, great insights on Fastly, right? Since
Yes.
we cover Fastly, right? And many
Yep.
of your friends who are investing in growth stock, they're probably in Fastly or some similar stocks, right? So, once they see the stock name, they'll be interested to capture what they missed out on the session like that.
Yep.
Yeah. Okay. All right. Now,
Just in case,
I think that's why I have.
yeah, just in case we miss out any of our viewers who are actually watching this on replay after we have done the session live. Yes, we also would like to thank you for even taking the time of your busy schedule to actually watch the replay here. If you have any questions, or if any of our viewers here after you have gone through the session, you're thinking you have questions on the whole Fastly situation, the Fastly stock, our outlook, our considerations, our concern here, feel free to drop a question here into the comments. We will still monitor the post on this and we will reply as soon as we can. Yeah, Sarah, I got your wishes here. Thanks for that. Yes, yes. All right. Terence, you have anything to add before we end the session proper?
I don't. I think I'm good over here. I think thank you very much for all of you who have started to leave comments over here, and some of you who are still joining us very new into the group itself and our live stream sessions. As you can see, what I'm flashing right now is called Facebook user. We would like to know you more by person, all right, and be able to address you by who you are as well. So in the future sessions, please remember there's always a web link at the top of each post. It's called streamyard.com/Facebook, which we have also been flashing the banner at the bottom. Yeah. Okay. So yeah. So do this for us so that if you're joining us in the future sessions, we would be able to address you by yourself. Yeah. All right. It'll help us a lot as well. Yeah.
Yep.
Right now. So thank you very much. I think Jeremy will be running it seems like it works for Jeremy, so he might be running another poll again. So always the hottest flavor for the week will win.
Yes. We still have two more. We still have two more. Let me just count again, make sure I'm got it. No, sorry, we got it last Sunday. The last Sunday for October on the 25th will be our last stock Nit-Picking session for a dedicated session. After that, we will reconsider to see whether we'd like to continue that. If the response is good, or we will go back to we pick, we share model. So if, let's say, for example, there's a particular stock you'd like to have us to review, do pay a look out, pay attention to the poll that we'll be putting up later in the week, and then you can add your stock into the list and just try and generate a little bit more likes on posts into that poll so that we know that this is the company that is generating interest now and we can address that. All right. So this is Jeremy.
All right, awesome. Now, so once again, if you enjoyed some of our information, but you're not part of our community yet, or would like to find out more about how to sell options or how option selling helps you build a portfolio, there are two other avenues that you can do this. One, head over to our website at the bottom, flashing across the screen, www.impossibleinvestors.com, and then we have this part called the Project Options Cash Flow. It's pretty much a 30 days option strategy coverage where we did like the e-course online over here right now. So it'll be streamed and sent to you on a day-to-day basis on different option strategies. And another one will be to join me on Friday evenings, where I actually build a portfolio based on option selling for cash flow live together with all the participants as well. Yeah.
Right.
Okay. All right. Of course, apart from that, then you can consider joining one of our mentorship programs that we have out there right now if you have decided that you want to take on option selling as a whole, or to find out how I use option selling in my very own unique way, being an option seller for over 10 years right now. Yeah.
All right.
Okay. Now, so thank you very much, Jeremy. All right.
Just one last thing.
Next weekend,
one last thing, Terence. One more last thing. Yeah. For the viewers who happen to be joining us tomorrow evening for our live training session that I'll be heading, I will be posting a link or a reminder for a video that you need to watch if you can, or if you have not watched it before, from my previous sharing in our project options cash flow on implied volatility. It'd be very, very useful for you to understand the concept before we do the live trading tomorrow evening with regards to how I'll be screening for trades. All right. So again,
right. Also,
I'll be sharing.
Please also note what Jeremy is mentioning only applies to our community members, because tomorrow is live trading session for our community members. All right. So if you are asking why I don't see it, it's because it's only going to be posted in our community Telegram, and of course our members forum. Yeah.
Right.
Okay. Now, so for those of you who are joining live trading next week, oh my goodness, my phone is dying too. All my battery is dying. All right, now,
okay.
So you know, if all of you, those of you who are joining us for live trading tomorrow, remember Jeremy will be sending out the information. So do get to the prerequisite videos before you join the session, so you can benefit maximum over here.
Yep.
All right, now, so this is me over here signing off for today's session. Thank you very much for those of you who are joining us, and I see many of you who have stayed to the end. Thank you very much. All right, have a lovely weekend, everyone. Bye-bye.
Bye-bye, everybody.
Okay, bye, Jeremy. See you, man.
Bye, Terence. See you. Enjoy the weekend.
Thanks. Bye-bye.
Bye-bye.